going on, everyone? Welcome back to another video. I'm glad to have you here, and in this video we're going to be going over a trade I took on EURNZD this week. It has been the best trade I've ever taken since joining ASFX in early 2020. So in this video you're going to get a lot of value and knowledge, as I'm going to take you through step by step of how I found the pair to trade, since I trade a fair few pairs during the London session, how I identified the trend, how I did the high time frame analysis to get the overall direction and momentum of the trade, and how I found my sniper entry, as when I took the trade I was pretty much in zero drawdown whatsoever. So a lot of value in this video. Make sure you like, subscribe, and hit that bell icon. And without me going on and rambling too much, let's jump into the video. I'm going to pretty much break it down very simple for you guys. If you're not involved in ASFX, this will still get value either way, but if you are new to ASFX or you still kind of struggle identifying which pairs to trade and how to find the higher probability pairs, hopefully you get some value out of this video. So I trade pretty much all the GBP pairs, Euro pairs, and some of the USD pairs. As I trade the London session, those pairs are actively being traded. When I first get to my desk, what I do is I simply click on GBP USD, since that is the first on my list, and I will identify the TDI indicator on the 15-minute chart, since that's my trading time frame. So what I'm looking for is I'm looking for the TDI indicator. The TDI indicator is a trader's dynamic index, and it measures market sentiment. Above the 50 line, I have a bullish market sentiment, and below the 50 line value, I have a bearish market sentiment. So above, I'm looking for longs, below, I'm looking for shorting opportunities. The main thing I'm looking for is the yellow line, and it needs to be either in the buy zone or the sell zone from the open of the market session. So the open of the Asia session. So what I mean by that, if I just come over here, you can see these two white bars over here, this white bar there, and this one over here. What this represents is the Asia range. Just draw a box. That is the Asia session time, when Asia market is currently being traded. And then after that, which you can see just over here, that is when the London session opens, and you can see how the volume and volatility kick in. This is why I love trading the London session. The main thing I'm looking for, coming back to the TDI indicator, is this yellow line in one zone or the other throughout the whole day. I will not take a trade if this is swapping. So as you can see, as the London session opens, the TDI indicator goes from the buy zone, which is above the 50 value, and it swaps into the sell zone, and then it stays in the sell zone for the remaining of the London session into the New York session. So as you can see, if I just get rid of this, you can see how we continued bearish, market pulled back, and then we had that massive bearish move. Now, of course, you don't simply just trade because of that indicator is telling you. We have to build a massive confluence, and we have to find the higher probability trade setups. So once I identify a perfect L50, which is the liquid 50, the yellow line on the TDI indicator, I will then move on to the next pair. And then what I'll do is I'll simply mark up. So you can flag them, and I'll just flag it with a red dot. And then going down, I'll do the same thing for every single pair. I'll find the perfect L50s either in the sell zone or the buy zone throughout the whole day. Once I've done that, I will simply, let me get rid of this. I'll simply come in and look for the EMAs to be in confluence with the TDI indicator. So if for this example over here, you can see the L50, we started the day over here. To make this a bit thicker. This is the Asia open, the Asia session open. We started the day in the buy zone into the London, and then it started swapping. So this wouldn't have been on my watch list, as I don't get to my desk until 7 p.m. Sydney time. And obviously this would have been swapping by then, so this wouldn't have made it to my list. But what I do in this example is I'll need to match the TDI indicator with the exponential moving averages. And I'll need to have the EMAs, in this case, in a long bias. So the 800 EMA on the bottom, the 200 EMA above the 800, the 50 above the 200, the 21 above the 50, and the 8 above the 21. That will be matching the bias on the L50. And then that simply gives me my overall trend on the 15-minute. It's that simple. I keep it easy. There's no need to overcomplicate it. So let me show you what I was looking at on EURNZD. So just coming back to finding the best pairs and the high probability pairs, just go through and then match the two together on the 15-minute chart. I'll show you the high time frame analysis in a minute. So coming over to EURNZD. Now I'm going to use the replay tool to show you where I took the trade, and then I'll break it down for you guys as well. So this trade was taken on the 3rd of June 2021. So that was this Thursday, so 2-3 days ago. And as I was describing before, the Asia range, which is this box over here. So that's the Asia session trading. And then as I was saying, we match the L50, which is in the buy zone all day. And you can see it's holding in there quite steady and stable. That's what I like to see. And then, like I was saying, we match the EMAs with that indicator. So as you can see, we have the 800 on the bottom, the 200, the 50, the 21, and the 8. Now, that is confluence. Both of those indicators, both the EMAs and the TDI, are in confluence with each other. So this is on the 15-minute time frame. And now let me take you up to the daily. On the daily time frame, you can see that the L50 is indeed in the buy zone as well. So that gives me a bullish market sentiment. But if you look at the 800 and 200, you can see we're coming up there. I don't look at the 200 and 800 EMA on the high time frames. I only look at the 800 and 200 on the 15-minute, as that would be my take if that's a counter trend trade, if I was to trade counter trend, which I do not. So let's just get rid of the 800 and 200 just to show you and keep it simple. As you can see, we have the 50 EMA on the bottom, the 21 and the 8, and they are stacked very nicely on the daily. That tells me that the market is quite bullish and we could definitely see a move to the upside. You can also see we're trading in this range over here. So what I'm looking for is the ASFX method to take advantage of breakouts. So once I identified that, let me just get rid of these. I then come down to the 4-hour chart. Once again, I'm not using the 200 or 800 EMAs on the 4-hour. I'm simply looking at the 50, the 21 and 8. Looking at the 4-hour, you can see that the L50 is in the sell zone, but the EMAs are bullish. So EMAs are bullish, TDI indicator is not. Coming over to the 1-hour, you can see EMAs are bullish, TDI indicator is bullish. So I now have the daily EMAs, the 4-hour EMAs, and the 1-hour EMAs complementing the 15-minute trend. And now I have the daily and 4-hour TDI indicator complementing the 15-minute trend as well. So that gives me a very strong indication that EURNZD is bullish. Coming back to the 15-minute, I now stack all my parameters, the ASFX parameters together, and build out a case and try and take advantage of an entry that may signal in the market, and then take advantage of that opportunity. All right, first thing I want to show you is divergence. Divergence simply means change could happen. Price may react to this line up here. Divergence is price action and an indicator such as an oscillator telling you the inverse story. So you can see on the RSI, we have a high here and then we have a lower high. But on price action, we have a low and a higher high, but the indicator is doing the inverse. So what that tells me is if we do get a breakout and a signal, just be aware of the divergence line. Price could react to it or something could happen and it could reverse or chop around a little bit. So that is a knock against the parameters. So now we can simply do a call out bubble and we can start to build a case and stack all the parameters in our favor. So the high time frames are bullish in confluence with the 15-minute chart. We have a perfect L50 on the 15-minute. We have perfect EMAs on the 15-minute chart as well. We have prices out of the Asia range. So just to touch on this real quickly, you can see price broke out of this box, out of the Asia range. And what that tells me is that price is ready to move. It's not going to consolidate within that range. So more times than not, the Asia session is like an accumulation phase. And then during the London or New York cross, you will see the movements happen and the volatility and volume kick in. So that is a momentum signal for me saying price has broken out of this Asia range, and we could definitely see price continue in that direction with the EMAs in our favor and the TDI indicator in our favor as well. So coming back to the parameters, we also have RSI is not overbought. So I only look at the current day that is overbought. So yes, it is overbought over here, but since the new trading day, it is not overbought, so that is not a knock. And the only thing wrong with this setup is divergence is present, meaning we have active divergence in the market and price could react to that line. Now let's go forward. And before we do, I just want to show you what really gave me the confidence to jump into this trade. On the 1 minute, you can see over here, price is simply making higher highs and higher lows. That is a very bullish signal. Now, like I was saying with bullish divergence, you can see over here, we have a low set of price action and we have the inverse on the RSI. So price action is making lower lows while the RSI indicator is making higher highs. What that means is price could reverse, chop, or signal change or reaction in the market. So now that we have that on the 1 minute and we simply start getting higher lows and higher highs, and then we get that breakout right there. This gave me a lot of confidence to come back to the 15-minute chart. Let me just get rid of these arrows and identify a breakout signal, which is the ASFX A1 setup. Now, there was also an ASFX D1 setup on the 1 minute chart as well. That is simply using divergence and a break of one of the significant EMAs. Coming back to the 15-minute chart, you can see we had this bullish bar, which came off the divergence on the 1 minute, the higher highs and the lower lows, and then we had that breakout. On the 15-minute, you can see this nice big candle, and this represents the ASFX A1 signal. This is a signal and system I absolutely love. I didn't get involved on the candle close. I'll show you what I did to get more of a sniper and more precise entry. What I simply did is I went back to the 1 minute chart and I waited for price to come back down to this 50 EMA. So as we can see, coming over here, I waited for price to retest it, and that's when I got involved. So as you can see here, the trade went straight in the profit as soon as I took my entry. Now, coming back to the divergence line, we can see now price react to that trend line. So you can see price pinned it a few times and then we broke above it. Now, watching this in real time as the candles were actually printing, of course, we don't know what's going to happen. So I was reacting and making sure price wasn't going to come back and stop me out. So trade management was pretty much my main priority on this EURNZD trade. But once again, we had a very, very strong confluence, bullish momentum, bullish direction on this trade. So I was very confident in this trade going into my favor. As far as trade management goes, I take on B setup. So this was a B setup. I take my profits. I take 50% at 1.5R. So you can see here, I'll take at 1.5R, so once the trade hits 1.5, I'll take 50% off the trade. And then at 3R, I take another 25% off. And as the trade progresses up to 4R, we can see the momentum kicks in. And at 4R, I'll take another 25% off. And what I'll simply do after that is just let the trade run, managing my stop loss at R multiples. So what I mean by that is once the trade goes to 5R, I will quickly add once the trade hits 1.5R and I do take 50% off, I put my stop loss to break even. So it becomes a risk-free trade. I've bagged some profits and I can no longer lose my initial risk. So I put my stop loss locked in profit. And now what I do as the trade progresses to 5R, I put my stop loss moved to 1.5R. And then as the trade progresses even more to another R multiple, which in this case would be 6R, I will then get my stop loss and move it to 2R. So I'd move it to 2R. And then as the trade progresses to 7, I'll move my stop loss to 3R. and so on and so on. And as you can see, if I just play this trade, it held the 8 EMA pretty much the rest of the trading session, hitting 11R before it breaks the 8 EMA and then comes back down, breaking the 21 EMA. And that's when I was fully out of the trade. Of course, not all trades are going to be runners like this. I always thought when I first started getting into trading, I would set and forget. I would put my stop loss, I'll set my targets and let the trade do whatever it wants. Trade management and what Austin has taught me is being a massive game changer in my trading. I can take advantage of the initial momentum move, plus I can take advantage of where the market wants to go if it keeps going and ride these trends out for the rest of the day. The most important thing and one of the most crucial things in trading everyone should understand is stacking multiple confluences into your favor. I get a lot of questions and a lot of people still do this where they will buy and sell based off one indicator's parameter. If the RSI goes overbought, they will place a sell order. Or if the RSI goes oversold, they'll place a buy order. That is not the way to trade. You want to stack as many parameters in your favor. You want to make sure the high time frames align with your trading time frame. In this case, my trading time frame being the 15-minute, and I gather the 1 hour to 4 hour and the daily confirmations to complement my 15-minute chart, my trading time frame. I then stack the EMAs in my favor, make sure the EMAs are bullish, make sure the high time frame EMAs are bullish. And then I come in, look at price action, stack divergence in there. I stack the Asia range in there and all these other confluences with price action as well. Doing this ensures you are only taking the highest of high probability trade setups. Of course, you're going to take less trades, but that's the overall goal. You don't want to be taking trades after trades after trades just to be getting action and just because you want to be involved in trades. That's not the way it works. It's how I used to think, but now I'm focused and process driven. What I do is I focus on the best trade setups. I don't care about making money. Money is just a byproduct of following the process 110%. That is the most important thing every trader needs to understand. Once you stop becoming money focused and start becoming process driven, your trading performance will dramatically increase and you'll find yourself taking higher probability trades. You'll find yourself being more focused, more in tune with the market, and just an overall better trader. So once you remove the money aspect, you remove the emotion, most of the emotional side of all your trades. The one thing you don't want to try and do is revenge trade. Try and make double your position because you want to make more money. That's not the way to do it. You want to focus on not taking losing trades, focus your attention on the higher probability trade setups and put your money into those ones. You don't want to just be getting involved in the market for the sake of action. If you want action, go down to the casino. But if you want to focus on good quality trading, making money over a long period of time and staying in the game, put your attention and focus on stacking multiple confluences into your favor, doing high time frame analysis and focusing on quality trade setups. I hope you guys got some value out of this video. I know it's quite a long one. Let me know in the comments below your thoughts on this trade. Once again, you're never going to catch runners like this, but that's why you have to focus on trade management. So don't forget to hit the like button if you got some value. Don't forget to subscribe to the channel and hit that bell icon to get notified for any content I release. Once again, I appreciate you all being here and I'll see you all in the next video.